Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the surprise Chinese devaluation is shaking up world markets. But first, in the US, productivity rose strongly in the second quarter, but not as strongly as was expected. And a weak underlying trend suggested inflation could pick up more quickly than economists have anticipated. Wholesale sales were flat in June and inventories remained high in other data that was released overnight. And small business confidence bounced back strongly in July from a 15-month low as owners anticipated solid sales and inventory growth. But it has been the surprise devaluation of the Chinese currency that has galvanised markets overnight. It has stocks and commodities and boosted government bond prices, undermining yields. The 1.85% devaluation is the largest in China's history and reflects a sudden shift in Beijing's exchange rate policy, changing their policy focus towards stabilising growth rather than staying on their reform program. It is very noticeable that every journalist seems to want to get the term currency wars into their coverage of this change. But there was also data out overnight that car sales in July in China came in 7% below the same month a year ago, and unsold stocks are rising. In Europe, overly indebted Greece and its international creditors reached an $85 billion bailout agreement overnight after nailing down the terms of a deal in principle they reached a month ago by taking on even more debt. This deal is supposed to save them from financial ruin and keep them in the Eurozone. And in Australia, business confidence has fallen sharply after 2 months of positive sentiment, according to the latest monthly National Australia Bank survey. Concerns about China's slowdown are weighing on companies' outlook. Similarly, Singapore reported growth of just 1.8%. That was the weakest in 3 years and held back by those same China concerns. In New York, the US Treasury 10-year yield benchmark has reacted to the Chinese devaluation consequences in trading today and is now down sharply to 2.13%. The oil price has fallen as well, and in the US is now currently just on $43 a barrel, and Brent crude is now back to under $50 a barrel. And the gold price is higher, however, on all this uncertainty, but only marginally, up to $1,110 an ounce. New Zealand dollar starts today lower as collateral damage from the Chinese devaluation, now at 65.3 US cents, 89.6 Aussie cents, and 59.2 euro cents. The TWI is at 70.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.